Hello everyone, welcome back to the weekly market outlook. And in this week's video, we are going to again look at how the indices and check out how they have performed. Also the outlook for the upcoming week. So first, let's do a quick discussion on the market performance last week. Well, the US market began with a positive movement as some deep buying activities took place, but poor result from Google spokes the market as the selling pressure returns and the indices crashed. Despite surprising negative growth on the GDP, Meta was able to save the market as their better than expected result provides a glimmer of hope for growth. But however, the second atomic bomb came. Amazon unexpectedly reported losses due to Rivian investment, but even without Rivian, the earnings came significantly lower than expected. Apple's result was good, easily crushed the expectations, but the outlook spoke the market and provided a double whammy for the market. The selling started from opening till ending at the last day of trading for the US market. So the US market crash landed again for last week. Now going to the Asia market, the STI ended the week flat, but the candle on the last day of trading looks bad. Hang Seng for the first time in weeks had become the best performing index as China government vowed to improve market sentiment. As such, market took that as a hint of lesser crackdown or the end of crackdown. The index ended strongly with a strong, significant white candle. Well, let's look at the performance chart and then share with you how the market has performed so far. Now on the screen here, you are looking at the wick. So with reference to 22nd April, we can see that the US market is down again. So we have the blue, the red, S&P 500 and NASDAQ, which is green, all down from 2 to 4%. Hang Seng, which is in Sion over here, is up about 2% or higher than 2%, 2.3% around there. STI is actually flat at 0.0% over here, slightly negative. So I take it as flat. Now, if you look at the whole month for April, let's do a recap over here. We can see that the general markets are down for the month of April, where STI recorded slightly lesser than 1.6% lower. Hang Seng fought back to close slightly less than 4% lower. And then we have Dow, S&P 500 and NASDAQ all crashed down. Well, as Dow was down around 5%, NASDAQ around 13%, around 13.6% rather. And then S&P 500 is about 9% down. Year to date, we are looking at a bear market for the US as NASDAQ is about 21%. That is already in the bear market region. While S&P 500 is also in the bear market region as it recorded more than 10% lower. Dow just hit 10%, just touched the 10% level. So technically, all of the markets are in the recessions. Yeah, I mean the three indices in the US market are in recessions or correction rather. I beg your pardon. And Hang Seng managed to fight back to be slightly less than 10% lower. So all this performance has been quite stunning as the market braced for higher interest rate hike. And let's take a look at the index right now. Starting with the Dow. So we can see the market is technically in a downtrend. Why? Because you see, started from the first day, Dow was up and it was positive, trying to fight back from the dip over here. But, we can see a stronger sell-off whenever there's a bad news, the Dow is always met with a stronger sell-off, and then rebound weaker, and then another strong sell-off again. This is close to 1,000 point, 939 point to be exact on Friday. We can see that the market is actually looking at to move lower with the next support at 32549. So later on, when wrapping up, I'm going to share what to look out for next week, and hopefully we can see some good support to be formed, because when the Dow last week tried to form a new support or form a new minor support over here, let's draw a line over here at around 33136. This is a new minor support for the Dow. It broke it again. So this is actually the sign of a downtrend with support breaking and resistance holding. Now, moving to S&P 500, you can see the same sign as well. S&P 500 on the first day tried to hold above the support, as the first day it fought back strongly to close higher. But the second day heavy sell-off, then we tested this support level around here. This support is around 4163, and then it breaks it, and then going to 4112 on Friday. It was a non-stop sell-off for the index. The Nasdaq is the worst performing index. Like I say last week, going down 3-4% a night is quite a norm now, and we are looking at this support at 12,229. So basically we are facing a bear market here, and just to turn on Nasdaq to the weekly chart over here. Of course, if you were to look at the whole weekly chart, it's like a serious downward movement over here with a continuous downward action. Now, if you were to look further into a monthly chart, we are looking at a very as I said, it was down 22%, so definitely it's a severe oversold condition over here. So yeah, let's move on to the Asian market. STI, in fact, the whole week considered as a sideways consolidation, because Friday was a bad closing. So why do I say a bad closing? A higher opening above its resistance at 3365, and then a strong rally got erased with an intraday sell-off, and then pushed the index below 3365 resistance to close around 3359. In my opinion, this is a very negative sign, because this tells you that, in fact, market is taking this opportunity to sell off their position before the long holiday. So throughout the whole 2 days holiday, I believe the Singapore market will still be looking at how the US performed, and then decide how it is going to open on Wednesday. And of course, today, if you watch the Labor Day speech by our PM, Mr. Lee, he mentioned that there is a recession fear post-COVID. So basically, the recession is now becoming very real. Even the Singapore PM is talking about it. So let's move to Hang Seng. So Hang Seng over here, we can see a very strong closing here. But before that, let's look at the beginning of the week. The beginning of the week, as I anticipated, is likely to break support break this support at this 20,140. And what happened was the index was on its way down until the China government or the Chinese government stepped in to help the market to rebound strongly with some market-friendly information. So with this strong closing, actually set the Hang Seng back to the upward path, with the immediate resistance, or the key reason to watch now is 21631. Okay, so after the holiday tomorrow on Monday, we'll see whether this rebound or this rally is strong, or it can be tested over time with this continual rally to resistance. If it start to flutter and sell off again, then we know that it is all hype, and we can call this as a mel jump or the dead cat bounce. Well, next, we are wrapping up over here. We are looking at the this U.S. market going into a very bad situations over here. We have been looking at this downtrend, and this downtrend continues. Even the officials in the US remain that their economy is still strong, but the surprise negative GDP growth must have made this official eaten some of their words back. I believe the FOMC and interest rate decision next week will also seriously consider this as a warning sign. If the US government and the Fed continue to live in denial, then the US market must be the US stock market must be the first to reflect the true strength of the US economy. Now, in such a crisis, the market tends to correct 30% and more, and NASDAQ is just 8% away. Now, in 2008, the US market crashed by more than 60% due to the subprime issue and the collapse of the Lehman Brothers, which was the last triggering point to push the market another 30% down. And in these two occasions, 2008 and 2020, the Fed dropped the interest rate to zero and printed serious amount of money. If the US market continue to crash, I wonder this time around, will they do the same, where they are going to reverse back the interest back to zero, they haven't even hit 1%, and print more money again. And do remember that each time when they print money, of course, it is going to hurt their economy even more. Why? Because there are even more US currency flooding in the market. Now, when I was having dinner earlier, I remembered that commodity price was skyrocketing in 2008 from 2006, 2007, and 8. Example, oil went above $100 for the first time in history in 2008. And then the market had gone into a recession. Seems like now history is repeating because all the commodity prices are skyrocketing. All I can say is that some irresponsible governing and handling of matters at hand causes all this calamity, and this may be a good chance for those who are not in the market to start buying good stocks at the cheap again. I remember when back in 2014-15, AMD was just trading at 10 plus. Nvidia was below $90. Netflix was below 100. So many counters all below 100, and this may be the sign for us to pick up some of this counter again. And of course, next week we have a slew of economic information for the market to digest. So of course, the FOMC interest rate, this is the key. And then we have a non-farm payroll, we have the jobless claim, we have the ISM manufacturing. And of course, the next coming week, we have the CPI data. All these are going to be deciding the market's fate in May. So, well, hopefully we end the May stronger than April. And thank you for viewing this video. I will see you again.